Brad Williams, Frugal Finance. What are home appraisals and why do I need to look at them? When you shop for a car, are you looking around to get a value, get an idea what that value of that car is? Well, we do the same thing in the home purchasing arena. When you buy a home, you need to compare the value. And because of the intricacies, because of the requirements, typically borrow as a percentage of the value of the home. Now, this fluctuates. There is volatility. Home values can increase and home values can decrease. And when they start to decrease, it's not on a month-to-month basis. It usually is fall off the cliff kind of deal in the housing industry. So the appraisal is a value of comparable homes, generally within a half mile in a city type environment. If you have to go further than a half mile, the lender is going to ask, are these fair comps? Comps are comparables. If you're in the rural area, you may find appraisals that could be 3 to 5 miles away. That's just the way it is. What lenders are looking at, does the value support the loan? In other words, if you're trying to buy a $500,000 house and the values in the neighborhood are $400,000, then perhaps you're overpaying. Perhaps the appraisal can't support that particular value. And subsequently, you're going to end up paying that differential, and perhaps a lender just won't lend. Well, they'll lend, but they'll only lend to a $400,000 value. You'll have to make up the difference. I have a video on that. Don't pay more than the value of the house. In a hot market, you're going to find, is the house chasing the appraisal or is the appraisal chasing the house? In other words, in a hot market, who determines the true value? Well, shady appraisers will crank out any number if you give them a kickback. Yeah. So what if an appraiser has a license? An appraiser is as vulnerable to any schemes. And I know appraisers that did this, and they're no longer appraisers. They were jacking up values of homes. This was 20 years ago in the crazy frenzy, and they were just coming up with artificial numbers. The lender was supporting them. That's why we had this crazy price valuations that were unsupported. They were just fictitious numbers. That's where the appraisal side used to be less scrutinized. Now, like everything within the housing industry, from the lending side to the appraisal side to the mortgage broker side to the reporting, it's much tighter because there was very little regulatory oversight. An appraisal is a written document that shows an opinion of how much property is worth. The appraisal gives you, it describes what makes it valuable and may show how it compares to other properties in the neighborhood. An appraisal is an independent assessment of the value of the property. Now, there's a number of different types of appraisal. You'll have a full appraisal where the appraiser will physically visit and take photos of the interior and the exterior of the property. Then there's a drive-by appraisal. Depends on if you're refinancing, if you're buying, if it's a second mortgage, if it's a home improvement, if it's a HELOC, if it's a third mortgage or fourth mortgage. Depending on the lender, they're going to require some type of appraisal. Cost of the appraisal is based on the type of appraisal. When you borrow money to buy or refinance a home, your lender may need to get a new appraisal and may require you to pay for it. I've never, in this era, most likely you're going to end up paying for the appraisal. Unless you're buying a property and you put the burden on the seller. But again, there's always biases. So if a seller has to pay for the appraisal, well, they're going to nudge the appraiser to get the highest value possible. And then on the other side, if you're the buyer, you want to get the appraised value as well as possible. That way, when you're negotiating, you're going to try to push the price down. Your lender may also use other ways to check the value of your home. For a typical home loan, that is loan secured by a first mortgage on your resident. That is a loan secured by a first mortgage on your residential real estate, not a second, not a rental. You're entitled to receive a copy of appraisal and opinions of the value your lender gets. You should receive them soon after they are delivered. And I've commented on this. When I was doing this, I always made you, the borrower, pay the appraiser directly. In the past, I would ask for the money up front. Then you'd have to go through and deposit that money into a trust account. It was real a pain in the butt. So my motive of operation was to have you pay the appraiser directly. You can't be charged a fee for copies of an appraisal or other valuations. Okay, that's just a moot point. Depending on who you're working with, most likely they're going to ask for money up front. Now be careful here. Make sure it's not a scam. Make sure the lender is a lender. That means if you're in California, they're going to have what's called a Department of Real Estate number. Ask for that number and make sure they're not in violation of anything, that their license has to be a broker, and the mortgage loan officer should have a real estate agent's license. So you're going to need to check that information. If it's a mortgage banker, they should be licensed through the appropriate agency. It just depends on what state you're in. And then if it's a large lender, Bank of America, United Mortgage, Wells Fargo, any of the online groups, just verify that they are who they are. Comment, let me know. Brad Williams, Frugal Finance. Thanks for watching. Hope that helped. See you soon.